Fantastic. Thank you so much. For our next keynote, I'm excited to introduce, I'll tell you the title of it first, Bit Bonds, an idea whose time has come. Welcome me and joining us, Andrew Hones of Newmarket Capital.
Good afternoon, good morning, everyone. I'm thrilled to be here. My name is Andrew Hones. I'm the founder of Newmarket. We're a registered investment advisor specializing in structured credit. We've completed about $50 billion worth of notional risk transfer over the last several years with many of the world's largest banks. As respects Bitcoin, I'm also thrilled to have been the founder of Battery Finance in partnership with 1031, the largest Bitcoin-only venture firm in the world. And I'm also delighted to serve on the board of Fold. You may have seen recently we announced the completion of our first transaction blending Bitcoin with a traditionally financeable asset, which was a commercial real estate loan that we completed in Philadelphia and announced on CNBC some time ago. We have a deep pipeline of those types of investments, and we're actively working with pensions across the United States to assist them in, let's say, safeguarding their credit investments from the ravages of inflation. Today, however, I'm going to share a thought experiment related to the Strategic Bitcoin Reserve and the United States Treasury. In particular, we're going to talk about bit bonds, and our goal today is to think about how could we lower 10-year interest rates, build savings for American families, and at the same time defease the national debt. These are three pretty big objectives, but I think that they're remarkably achievable when you begin to perceive the compound annual growth rates of Bitcoin. And in many ways, Michael's talk earlier today set the stage for this in a beautiful way. First of all, we have $9.3 trillion of federal debt that's coming due within the next 12 months. The interest rates on that debt have dramatically increased over the last 3 years, and refinancing it at today's interest rates will create an extremely profound burden on taxpayers. Secretary Bessent has indicated his strong desire to spread future Treasury issuances across the duration curve, avoiding the risk of putting everything in the short end of the curve, as Secretary Yellen did. President Trump and Secretary Bessent have also indicated their strong interest in lowering 10-year interest rates, which have an important effect on consumer finance, mortgage finance, auto loans, as well as the federal interest expense. President Trump created the Strategic Bitcoin Reserve, and in particular directed the United States government to identify revenue-neutral ways to acquire Bitcoin. By creatively integrating Bitcoin into Treasury bonds, I would like to suggest that we can significantly reduce the borrowing costs of the federal government and defease the debt. And in particular, I would like to propose that for Americans that purchase these bonds, that they be tax-free from both interest as well as capital gains and offer a very strong way for American families to rebuild wealth. So what's the program? It's actually pretty straightforward. $2 trillion bond issuance, 10% of the bonds go for the purchase of Bitcoin, 90% go for other government purchases. Per $100, $10 buys Bitcoin. The interest rate on a current pay basis is much lower than the normal interest rate, only 1% per year. This dramatically reduces the current interest expense of the federal government. At the conclusion of the bond, in this case a 10-year bond, investors are due a compound annual growth rate of 4.5% on a senior basis. That's equivalent, roughly, to the 10-year interest rate on treasuries today. And after they receive 4.5% on a senior basis, they're entitled to 50% of the Bitcoin upside, and the United States government retains the other 50% of the Bitcoin upside. What would this look like? Well, if it's a $2 trillion issuance right off the bat, that would mean $200 billion worth of Bitcoin purchased. At $90,000 per Bitcoin, that's 2.22 million Bitcoin. Of course, the price will fluctuate and likely will acquire a different amount than that, but that's at $90,000. What would this look like in terms of savings? Well, the current U.S. 10-year rate is roughly 4.5%. And the proposed rate for the bit bond is 1%, which is a 3.5% annual savings or $70 billion on $2 trillion of total issuance. Over 10 years, that's $700 billion. On a present value basis, roughly $554 billion. If you consider the cost of acquiring the Bitcoin, which is $200 billion, that produces a net taxpayer savings on interest presently of $354 billion. In other words, the United States federal government could acquire $200 billion of Bitcoin and save $354 billion at the same time. Of course, this is just an illustration, but I think that it would be great if American families could also purchase these bonds in addition to institutional and foreign investors. Like Tether, we learned today that they have enormous holdings in United States treasuries. And institutional and foreign investors will be attracted to these bonds because they can serve as eligible collateral for a range of different swap and derivative arrangements. But for American families, I would like to propose that the BIT bonds be free of income tax and free of capital gains tax in order to put a tremendous tool for savings in the hands of everyday Americans. What would this look like? What could an American family expect to gain over the course of 10 years? Well, there are 138 million American families, and if they purchased 20% of this total issuance, that would be a $2,900 investment per family. What I've illustrated on the right are the 4-year compound annual growth rates for Bitcoin at the 10th, 25th, 50th, 75th, and 90th percentile. And as you can see, at even the 10th percentile, the interest plus the Bitcoin upside on this bond would be $96.58 for a compound annual growth rate of just shy of 7%. And that's on a tax-free basis, a tax-exempt basis. At the 25th percentile, you're looking at 9.33%. And at the 50th percentile, you're looking at a tremendous return over a 10-year period, 17%. What would this look like for the government, for the United States of America? We would dramatically reduce 10-year interest rates. We've already discussed that. Significant savings, $554 billion present value savings. Substantially reduce dramatically reduce the interest rates from 4.5% to 1%. That can ripple through the rest of the Treasury market and reduce mortgage borrowing, reduce auto borrowing, reduce small business lending costs, so many different advantages. Also substantially reduce the interest expense for the government. That's where the present value component comes in. Revenue neutral acquisition of an enormous amount of Bitcoin. And if you take a look at the CAGRs, and we have a symbolic one in there that I want to draw your attention to, but if you take a look at the 25th percentile compound annual growth rate, 37% per year, which, by the way, is exactly equal to Michael's bull case for Bitcoin in the year 2045 on a CAGR basis. That produces a government upside in this structure, and I did not plan it this way, it just turned out this way. That produces a government upside in the structure of 1776, 1.776 trillion US dollars. That's after 10 years. As you extend this out to 20 years, in the year 2045, the compound annual growth rate of the 25th percentile, 36.62%, produces a government entitlement of Bitcoin that is slightly greater than $50.8 trillion, which is the expected size of the funded federal debt in the year 2045. In other words, with this plan, we're in a position to defease the federal debt. In summary, BIT bonds are a win-win-win. We're looking at dramatically lower interest rates in the form of savings, $554 billion of present value savings. The upside that the government stands to generate is enormous, anywhere between $830 billion to over $300 trillion of upside from the 10th to 90th percentile of historic Bitcoin performance. The debt offset is significant at just the 25th percentile of performance. This is a plan that can defease the entire debt. The family wealth creation is remarkably powerful. This puts in the hands of everyday American families a tremendous tool to defend against inflation. And in summary, I would love to see this adopted by the Treasury and by Congress. So I thank you all for your time today, and I'm very grateful to Grant and David and Matt for putting on such a tremendous conference. Thank you all.